What if the real reason countries never escape poverty has nothing to do with corruption, bad leadership, or lack of resources? What if every nation, rich or poor, developed or developing, is plugged into a silent financial machine that slowly drains value, accumulates power, and forces governments to borrow money that never physically existed? Because here's the unsettling truth. If every nation owes trillions, then someone, somewhere, must be collecting. But who? And what system is secretly wired beneath global economies that ensures debt grows faster than wealth? Money loses value every year, and citizens unknowingly pay the interest bill of a machine they never voted for? This is not a story about one country, one bank, or one crisis. This is the story of a hidden money circuit designed to keep the world running, yet never fully paid off. To understand how this circuit was built, we need to step back to a world before debt-based currency, before central banks, and before money could be printed without physical backing. For thousands of years, currency was tied to something real. Precious metals, agricultural goods, tangible resources, labor and trade if you had gold, grain, or livestock. If you had wealth, simple. Debt existed, but it was finite. It could not exceed what physically existed. However, as kingdoms expanded and wars became expensive, rulers faced a problem. How do you fund wars, expansion, governance, when you don't have enough hard money? This question opened the door to innovators, financiers, and opportunists. The first major shift came with the introduction of paper money backed by gold reserves. People trusted the paper because it represented physical value stored somewhere safe. But over time, governments realized something profound. If people trust the paper more than the metal, why not issue more paper than the metal actually exists? This was the birth of overissuance, the first spark of the modern debt machine. Banks discovered another trick: fractional reserve lending, the ability to lend out far more money than they physically held. It's quietly unlocked unlimited money creation, but with a catch. For every new loan created, a matching new debt must exist, and thus wealth no longer needed to be earned. It could be manufactured. Fast forward to the 20th century. 2 world wars devastated global economies, forcing nations to borrow massive amounts of money. To stabilize the world, new financial institutions emerged: central banking systems, international lending bodies, global monetary alliances. These institutions promised stability, peace, and growth, but quietly installed a permanent dependency model. Then came the most pivotal moment: the complete removal of the gold standard. In this new system, money no longer represented value. Debt no longer needed physical backing. Currency became purely confidence-based. This was the moment the hidden circuit became fully operational. From here forward, every dollar, euro, pound, rupee, and yen became degenerated currency. Money could be created endlessly, but the debt tied to it must always be paid with interest. Here's the simple but dangerous formula. Governments borrow newly created money. Money enters the economy as spending. Citizens and businesses pay taxes. Taxes are used to service debt. Interest. Debt grows faster than it can ever be paid. Government must borrow again. This creates a perpetual cycle. More debt gives more interest, gives more taxes, gives more borrowing. And because interest is not created with the principal, there is mathematically more debt in the system than money available to pay it. No country can escape it, not even world superpowers. Eventually, nations reach a stage where debt surpasses GDP, inflation becomes permanent, retirements become underfunded. Social programs weaken, taxes tighten, public anger rises to delay collapse. Governments use short-term fixes, printing more currency, extending debt ceilings, lowering interest rates, refinancing existing debt, selling future resources. But each of these choices leads to even larger, long-term consequences, because they treat symptoms, not causes. In the hidden money circuit, time becomes the enemy. The longer the system runs, the heavier the burden grows. Several global moments revealed pieces of this hidden design. The Great Depression. Post-war reconstruction debt, 1971 gold standard abandonment. 2008 global financial crisis, sovereign default scares, record-breaking inflation waves. Each event triggered government rescue operations using borrowed money. ironically strengthening the very debt system causing the damage. And today, global debt continues to break records at speeds never seen in human history. Modern economies are now addicted to degenerated money. Household, corporate, and government debt are at historic highs. Inflation is normalized rather than corrected. Digital money systems are accelerating the cycle. Wealth gaps widen as assets rise faster than wages. Patterns repeat across nations, regardless of politics. Left or right, capitalists or socialists, developing or developed, the results are identical because the system underneath is identical. This is not a political design. It is a structural design. So what should we learn from this? A currency backed by debt will always require more borrowing to survive, never repayment. Inflation is not an accident, but a built-in outcome of perpetual money expansion. True wealth is not measured in currency, but in assets that cannot be printed. And here's the warning. If this hidden money circuit continues unchecked, future generations may inherit not prosperity, but permanent financial captivity, where ownership is replaced with leasing, loans, subscriptions, and credit-based survival. The story is not about fear. It is about awareness, because systems don't change until people understand them. If this opened your mind, don't keep it to yourself. Share this video, subscribe for more deep financial breakdowns, comment below. I see the circuit. Your awareness is the first unplug.